Everybody, Tim Veigle here with Watson Realty, and I've got some great statistics I think you're going to love if you really want to see any type of, granted, we don't have a crystal ball for where this market's going, but we have some nice data that kind of gives us an idea of where we could be going over the next year or so and where we have been. So I think it's important to share it with you. So this is a special episode I'm doing just to give you a little bit of predictions. And again, tell me what you think. Leave me some comments. Don't forget to hit the subscribe button to get more information on everything Orlando. So let us begin. So let me work on trying to share this screen with you. You should be able to see this. I'm going to presenter mode. But yeah, it's going to be some great information here. Make sure that I am sharing this one. It's always tough to share sometimes on here. Okay, so getting started, as you tell, housing inventory is definitely lower than last year. Doesn't mean that we're not selling more homes. They're just not lasting on the market as long as they used to. So looking over data from December of 2021, year over year compared to December 2020, this is how the United States is currently looking. And as you can tell, there's a bunch of negatives. Unless you're in Idaho. Idaho has plenty of inventory, but we're going to focus a little bit more on the state of Florida since that's where we are. So as you can tell in Florida, we're at negative 48.1%, which is above the national average of negative 26.8. That's part of the reason why our housing prices are going up faster and faster and faster. It's because we don't have the homes to do. Simply put, you ever took economics and you learned about the law of supply and demand? Here's real life works of it going. Now, good news is, based off statistics, what we know, listings are going to be coming. So we're going to get a lot more homes to sell as the year goes on. And the spring and summer selling season, it's going to be off the charts. So if you're looking to sell, you might be thinking of those time frames. And if you're looking to buy, buckle in, it's going to be a wild ride. So now National Association of Realtors stated the pandemic likely spurred occupants to shorten their home stay as tenure in the homes decreased to 8 years from 10 years. So we saw a little bit of a decrease than we have since the last about decade, according to the report. This is the largest single year change home tenure since NAR began collecting such data. Now looking at the data, it kind of shows where people started decreasing from 8. Back when the original crash happened, we were at 6 and we were consistently at 6 with this data, but things changed. So, and with those things that are changing, people started staying in their homes longer than what was normal at that time. And now we're starting to see a decrease in that, which basically means all this is just pent up inventory waiting to be released into the public. So it's about to come. Now, manager of economic research at Realtor.com, George Ratu, stated the pandemic has delayed plans for many Americans, and homeowners looking to move on to the next stage of life are no exception. Recent survey data suggests the majority of prospective sellers are actively preparing to enter the market this winter. So many active sellers, depending on your time frame, spring, summer, winter, they're looking to enter the market. Now, here's a good graph that many of you that currently own homes are going to love. This is your homeowner equity growth still surging. So the national average was $56,700. In Florida, the average was $64,000. So if you were in a home year over year from Q3 of 2020 to Q3 of 2021, chances are your value went up $64,000. Pretty impressive. Yeah, I know. So this is some pretty good data points for you. Might be the time to sell, cash out that equity, take advantage of everything the market has to offer, or even refinance. It's up to you. Now, CoreLogic's Q3 homeowner equity report stated, the average homeowner equity gained about 57K for the entire US. Year-over-year percentage increase, that's 31.1%. Not getting that in the stock market, and you're not getting that in your savings account. So year-over-year total increase in equity in the US, basically $3.2 trillion. Wow. So this is like insane growth. I've never seen the industry do this, even when I was a realtor to prior to becoming a realtor. Now, everyone hears about inflation. Homeownership actually is a hedge against inflation. So real estate is one of the time-honored inflation hedges. It's a tangible asset, and those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. And that's the financial writer for Investopedia, Mark P. Cusson, is quoted as saying. So now here's a little bit to show you how it works. Look at the inflation, look at home appreciation. I mean, inflation for 2021 was 6.8%, one of the highest we've had since the 70s. And homeownership grew 18% for their equity growth. So it's beating inflation. That's good. And I mean, across the board, every decade, homeownership equity has beaten inflation percentage. So the only time that it hasn't was back in 2000, when everything was really low with inflation and the homeownership growth. Now, a fixed rate mortgage allows you to maintain the biggest portion of your housing expenses at the same payment. Sure, property taxes will rise and other expenses may creep up, but your monthly housing payment remains the same. That's certainly not the case if you're renting. So this is stated by James Royal, Senior Wealth Management Reporter for Bankrate. So, you know, that's the nice thing. Inflation will cause rentals prices to go up. However, homeowners, your fixed rate mortgage is a fixed rate mortgage. It's going to stay the same. It's not going to change like that. So here's a little bit of rent increase versus inflation. As you can tell, it's not always below inflation, but it is above inflation more than most. So when you see your rents going up, it's going to go up at the same rate, if not faster than inflation. So, and of course, homeowners are shielded from mounting rental prices because their cost is fixed, regardless of what's happened in the market. Tangible assets like real estate get more valuable over time, which makes buying a home a good way to spend your money during inflationary times. So Natalie Campesi, advisor staff for Forbes. So, and then Ali Wolf, chief economist for Zonda. If you have cash and are expecting inflation, you want to think through where you can put your money so it does not lose value. Housing is commonly looked at as a good inflation hedge, especially with interest rates so low. What can I say? It makes sense. Now, cumulative house appreciation by 2026, and this is just forecasting, and this was forecasting Q4. So optimistically, people are thinking that it's going to be up about 62.5%. Pessimistically, 23.7%. At the end of the day, it's growing. And then all panelists on average, it's about 43.3%. Now let's go ahead and talk and look a little bit into the mortgage rates. So chief economist for Freddie Mac, following a month-long rise, mortgage rates effectively stayed flat this past week. Recent rate increases have yet to significantly impact purchase demand, as results demonstrate that potential home buyers who are on the fence will often enter the market at the start of rate increase cycles. We do expect rates to continue to increase, but at a more gradual pace. Therefore, a fair number of current homeowners could continue to benefit from refinancing to lower their mortgage payment. So just looking at this one, 30-year fixed rate mortgage was at about 3.55%. 15-year was 2.8. So rates are climbing, but overall they're still excellent. So here's a look at how the rates have been climbing. So as mortgage rates rise, we do expect some moderation in housing demand, causing house prices growth to tamper. However, the combination of a large number of entry-level home buyers facing a shortage of entry-level inventory of homes for sale should keep the housing market competitive. In 2022, we expect purchase originations to grow from 1.9 trillion in 2021 to 2.1 trillion in 2022, while refinance activity is anticipated to decrease from 2.7 trillion in 2021 to 1.2 trillion in 2022. This is Sam Catter, chief economist for Freddie Mac. So, and all that's simply saying is because of the rise in interest rates, and so many have already taken the opportunity to refinance, they're probably not going to refinance. However, it's not going to keep homeowners from purchasing homes. So current mortgage rate compared to the last 5 decades. So look at this, the last 5 decades, even at 3.55%, we are low. These are still very, very low rates. So that's a good thing for you. People always freak out, oh, we got up to 3.55. What about if we hit 3.75? Well, look at it. I mean, heck, if your parents bought in the 80s, they're paying 12.7%. You know, in the 90s, we're 8.12% on average. Like the rates are still good at 3.55. Now, here's a fun fact for you. The 30-year mortgage rate has moved in unison with the 10-year Treasury rate. Let that sink in. So as the Treasury rate's going up, the 30-year fixed rate mortgage is going up. If the Treasury rate goes down, so does the 30-year fixed mortgage rate. And if you look at this chart, it's literally identical. So just with the mortgage rate being always slightly higher than where the fixed one was for the Treasury rate, the 10-year Treasury. 10-year Treasury yield skyrocketing. So as you can see, in December, it's been slowly going up, but moving up at a fast rate for the 31 days, all the way up through January 21st. And this is what's causing our mortgage rates to go up. Remember, it moves in unison. Now, let's talk a little bit about some projections for what 2022 has to offer potentially and beyond. So mortgage rate projections. So by Q2, we're expecting to see 3.5, but it's going to go up. It looks like potentially we might be tipping into our toes into 4% mortgage rates by the beginning of next year, but there's chances that we might not be that high. Each of these are believed to be, some are a little more conservative than others, but you know, these are all speculations of where we think we're going to see these mortgage rates going. Now, has the price acceleration peaked or not? Probably not. So we could still see our monthly prices increase throughout 2021. If you look at this, it looks like there's potential that we're going to peak probably August, September-ish. Now, peaking doesn't mean crashing. It just means we're slowing down. And it's going to be because of new inventory hitting the market, because this is all driven by supply and demand. Like right now, I have a lot of buyers I'm working with. I just don't have homes to sell. So home price forecast for 2022. So this is where they think the rate's going to go for 2022 as far as increases, and then the average is about 5.1% when it's all said and done. Only time will tell. I just looked over some data for the month of January, and this is what I can tell you. Some of these year-over-year trends for increases are off the charts. So there's some areas getting 20-25% increases year over year. So, but we'll see how the rest of the year plays out. Housing prices and existing home sales have historically been resilient to rising mortgage rates. according to Odetta Kushi, Deputy Chief Economist from First American. So with the rates going up, it's not like we're going up to some high ridiculous rate. People still need homes. And again, this hedges against inflation, and the rates are still good even with the increases. So as the COVID-19 pandemic continues to create uncertainty in the global economy, the overwhelming majority of single-family homeowners who sought financial assistance through COVID-related mortgage payment forbearance plans have exited those plans. So Andy Walden, VP of Market Research with Black Knight Data. That's a good thing. So, you always hear about all these people where they don't have to pay forbearances. Well, this here is stating that we are good. Like most of them have already left. So you're not going to see an influx of foreclosures that could cause market corrections. So forbearance has finally fell below 1 million. So if you look at this, the number has been significantly dropping each month. And now we're at 780,000 basically. So that's good. Now here's a fun fact for those. 38.1% were paid in full when they got off of the forbearance program. 43.7% have worked out repayment plans or some sort of payment plan to take care of the balance. Only 18.2% were still in trouble. So it's not going to be an influx like some have stated. So now, according to McClare Bolton Smith, Senior Leader of Research at CoreLogic, we may see a little bit of an uptick in foreclosure rates in 2022. Just an uptick though, just a little bit. From an extraordinarily low level, we're not expecting to see a big increase. We expect delinquency rates overall on home mortgages to actually continue to remain quite low. So overall, I do think that 2022 will be another strong year for housing, albeit a little bit higher mortgage rates. And we do think home sales will continue to rise and actually reach a 16-year high in 2022. So yeah, let me stop sharing the screen. So this is some great information. Just I wanted to get it out there and share it with you. I know depending on what headline you read, the world's falling, the housing market's going to adjust, it's rising. Oh my God, Stuart Little, we're in trouble. Not the case. Okay. Statistically speaking, everything is showing we do really have a healthy market. We do. Inventory might be a little bit low, but we're going to see an uptick of that coming up. We're not going to see a bunch of foreclosures. The housing price is still going to go on there. For those of you buyers out there that are sitting on the fence thinking, I'm going to wait until the market corrects, you could be waiting a while. So it might be best just to jump in and find that home now, because if you're waiting for a correction, you might be paying for a home in 400,000s versus 375. So it's all up to you. But this is good information. And again, please subscribe to my channel. Leave a comment below. Would love to get your input on this. But this is good information. I hope it's provides some value to y'all. And check out my information that I'm going to be releasing on Monday. It's going to be pretty good about how we've done January from January. Talk to y'all later.